Hey folks, Jim Thomas here, Fitness Management and Consulting. Hey, I appreciate you being here at the channel today. And real quick, before we get started, hey, be sure to check out our links below for our sponsors, for online, fitness certification programs that you can do all the way from beginning programs to very advanced programs. You can do these from the comfort of your home. And if you don't pass, you don't pay. So there's an additional benefit there if you struggle with that a little bit. And then also, consider please checking out our Patreon page where we provide for you all videos, podcasts, and articles all run into one particular page to give you all the information you need. And then for you folks that have not yet subscribed to the channel, please hit that subscribe button and look forward to chatting with you soon. Now, with that said, what I want to talk about today is the payroll tax holiday for gym owners, fitness center owners, health club owners, martial arts, whatever you have. And before I get into this, I want to offer a disclaimer. I'm not an attorney. I'm not an accountant. This is not meant to be, financial advice per se. But I want to give you some thoughts on this payroll tax holiday and how it's set up and what might be an opportunity for you. Now, for those of you not aware, the payroll tax holiday, it effectively starts today, which is September 1, and it goes through the end of the year, December 31st. And what it is, it's a deferral, okay? It's not being waived, okay? But it's simply a deferral, to help potentially, create additional income, for your employees. And essentially, it's that employee portion, I think, 6.2%. So, for example, right now, it's deferred, payroll tax holiday. When you do your payroll taxes, you do not have to withhold that. You can just directly give that, to your employee as additional wage and additional income. And you can do that September, October, November, and December. Okay. Now, where the rub on that becomes is this is simply a deferral. Come first of the year, that money is going to be due. So while your staff, your employees were picking up additional funds right now as a result of not having to pay that additional 6.2%, in a sense, they're going to get double dipped, come January. Okay, so that's the struggle with it. Now, what's been said, this is from Donald Trump saying that, hey, if he is reelected, he intends to forgive all that. Okay, now if indeed that happens, okay, and that is forgiven, great. You've not paid it. It's been forgiven. Everything's well and good. Now, if it's not forgiven for whatever reason, it's going to have to be paid. You're going to double dip, with your staff. Now, here's the second thing, okay? If you continue to do business as usual, you continue to, you pull out the 6.2%, you pay it as payroll taxes, you do kind of what's normal, and then toward the end of the year, if this is forgiven, you're kind of out, because it's already been paid. There really is nothing to forgive at that point. So hopefully that makes sense. And so here's the comment I want to make. Here's the suggestion that we have had with others and conversations that we have had with others and said, hey, what if we did this? What if this happened? So what if beginning today, that 6.2%, you're taking it out, but let's just say you put it into an escrow account. You let that money just sit into an escrow account. Employee doesn't get it as additional wage. It goes into an escrow account because you don't have to pay it yet. You as a gym owner, you don't have to pay it yet. Okay? And then every pay period, that money gets pulled out. It gets put into an escrow account. Come into the year, come January, because that money is going to be due in 2021. And so if say it happens as stated that Trump is reelected, and as he says, he is going to forgive that. Okay, great. It's forgiven. You can take that money that was given out, and then you can proportionally write that back as a check to your employees as a year-end bonus. To me, that's the great benefit. If indeed it is not forgiven, and indeed it's going to have to be paid, instead of having to go back and double dip on this thing, You have the money right there. You simply pay the payroll taxes. So that's really the idea that our kind of our brain trust has come up with, our mastermind group has come up with in that. So you pull the money out as usual, put it into an escrow account. At the end of the year, let's find out, is it going to be forgiven or not? If it's not, you simply pay the payroll taxes. If it is going to be forgiven, great. You write a check back to all those employees. So hopefully you found this beneficial, and if you like this idea, I'd love to hear from you. I'd love to hear your comments below. It's a little bit different, we understand that, but there is an opportunity there potentially to get some additional money into the hands of whoever is getting a paycheck on your team. There's a chance to do that. Probably it's not going to happen until end of the year or thereabouts, once you find out kind of what this is going to look like moving forward. But I'd love to hear your comments below. I hope this helps you. I hope it gives you something to think about. If you want to talk about this, if you say, well, I'm not quite clear, click the link below. We're offering a free 45-minute strategy session. You can click that link. There's also a phone number below. Feel free to text if you like that link. Any questions you have on this, happy to help you through it. I know a lot of gyms right now, we're looking for ways to, hey, how can we help our staff? How can we put more money in their hands? This is potentially one way to do it without that risk of having to double dip come January. So folks, my name is Jim Thomas. My company is Fitness Management and Consulting. Hope you found the information beneficial today, and we look forward to seeing you real soon. Thanks.